maybe to help you out, David, for the time being. Is that okay? Yes, I'm just doing that not because I want to put myself in the forefront, but because we agreed beforehand that I will be the first to start anyway. What I can't do now is the introduction, so I just introduce myself and hopefully David could come on later and do the proper introduction round for everyone. My name is Annette Windmeisser. I'm here for the BMZ, the Ministry for Development Cooperation in Germany, based in Berlin. And David was intending to ask me a question, which I'm now trying to do myself. Please bear with us for the time being. The question was intended to sort of set the scene a little bit, the political framework around what we are discussing on this panel today. So this is really around sustainable development finance and more in particular international climate finance, as I'm heading the climate finance division in our ministry. As you know, Germany, the EU, partners worldwide, some are here on the panel today, are working against the time, really. There's the race against physical effects of climate change already noticeable, and we're reaching points very soon. But there
Can you hear me now?
Yes, excellent.
All right. Sorry, I didn't want to interrupt you. Please go on, then I will take afterwards.
Okay, so I just continue. Fine, excellent. Do I get a couple more minutes? No, sorry.
Yeah, sure.
Yeah, and then, I mean, there are the physical effects of climate change, but there are also the socioeconomic effects on, particularly on the most vulnerable countries, and which are getting more pronounced. And so the international community had agreed to reaching the goal of mobilizing $100 billion by 2020. OECD numbers show that we've actually surpassed that figure, but only in 2022. But still, it's a milestone. But there's a big but. When you look at the figures precisely, you will realize that we only mobilized private finance between 14 billion to 21 billion, 22 billion in 2022. And this is a very significant figure. So to give you the context for that, when we look at the G20 report from the high-level expert group, what's needed financially to actually meet the Paris Agreement and related development goals is around 2.4 trillion US dollars per year in emerging and developing countries, excluding China. So that would be necessary until 2030. According to this report, 1.4 trillion has to be raised by the emerging markets and developing countries themselves, and 1 trillion would have to be primarily private financial flows from the global north to the global south. But we all know, obviously, public sector resources are limited. They're limited in the north and in the south. Despite the fact that my government is really committed to contributing or continue to contribute our fair share to the 100 billion and what's going to come after that, the NZQG, we are really looking into how to mobilize private sector finance. So we are focusing on that, and we are particularly focusing on the question on how to mobilize local private sector finance in the countries who are working at our partner countries to support innovation, mobilize resources locally, and act as a catalyst for sustainable development. But we all know that private sector, locally and internationally, are facing significant barriers in investing in climate and development, including policy and regulatory framework questions and uncertainties, low expected returns, and also high upfront capital costs, as well as a lack of bankable investment opportunities. So Germany is doing two bits, really, or on two levels we're working. One is to partner directly with our partner countries, building and enabling environments for private investment in climate. This, again, looks at regulatory frameworks, climate-centered fiscal policies, etc. Secondly, we are also trying to raise the awareness of these issues and trying on international, global level. And actually kickstarted its proper discussion around it. Many things have already been said. We're trying to sort of galvanize international action around that. So my Secretary of State, Jochen Flassbart, has initiated a high-level Friends Group, Private Climate Finance for Development last year. And in the context of this Friends Group, we've recently launched a series of national and regional workshops around domestic financial resource mobilization, trying to dig deeper together with the national development banks, IFADs, IFC, lots of various actors to actually tackle the questions, what's really sort of, what are the barriers, what are the possible solutions for that, and to deepen local financial markets. We call them acceleration dialogues, these regional workshops, and had a kickoff meeting in Kigali in July, and talking about local capital markets, building institutional capacities, leveraging digital innovations, etc. So with that, we're also trying to develop the capacities of local national development banks. And we are trying to generate global recommendations that can then be publicized and actually scale up the efforts of the private sector. So with that, I have tried to sort of set the scene, what's international political discussions and our targets and our challenges. Thank you very much.
All right. Thank you, Annette. First of all, ladies and gentlemen, I would also like to apologize for the small technical hiccup we had here, as it sometimes might happen when you are live on a conference, but it was quickly solved by our technical colleague. Thank you also for that. And yeah, also thank you, Annette, for stepping in while I had these difficulties here and to make the panel start. So I would like just to give a very brief introduction to this session number 4 with the title Funding the Transition, the Role of Thematic Finance. In the next, not 60 anymore, but I would say 50, 45 minutes, we will take a deeper look into different topics, and you already started, Annette, on how can the political world contribute to shape the transition. What is the role of a sustainable finance market, and also how to foster the transition? And in order to answer these questions, we have here several panelists on board representing the political sphere, and on the other hand, also the sustainable finance sphere. So please let me welcome you. Annette, you already did it very well. Thank you. But apart from you, we also have Simone Utermarck. She is Senior Director for Sustainable Finance at ICMA, the International Capital Markets Association. We have Natalia Toschi. She is Head of Funding in the Treasury at IFAD, the International Fund for Agricultural Development. And last but not least, Mr. Wang. He is Sustainable Finance Specialist Consultant at World Bank. My name is Marques Pereira. I am part of the DZ Bank Sustainable Bonds and Finance team, where we support issuers on their way to the sustainable finance markets. So Annette, again, thank you for opening the session and giving us the political pavement that we are now working on. And after your valuable contribution, I would like to look at another person who is also shaping the world, but in this case, the sustainable finance market, which is Simone. It is nice to have an expert here directly from the machine room, where you create the principles and the guidelines. And looking at the topic of our panel, how does ICMA see transition and how can it be financed? Are there any developments regarding your guidelines and standards, for example?
Yeah, thank you, David, and good afternoon, everyone. So at ICMA, we provide the secretariat to what's become known as the principles. So we don't create this ourselves. We actually support the executive committee, which is the market. DZ Bank is part of that as well, but also other underwriters, issuers, and investors. And I was very pleased to see that the panel talked about a theme of thematic finance, because we indeed see transition as a theme. We continue to do so because we think transition can really be financed on the one hand through use of proceeds bonds, such as green bonds, which are really environmental bonds. So that might make more sense in this context of transition, but also sustainability bonds, which is a mix of green and social. But then you can also issue general purpose bonds, which are called sustainability linked bonds, in order to underline a transition strategy. We then recommend that issuers who issue such a bond also use our guidance for transition specifically, which is the Climate Transition Finance Handbook, in order to add more credibility to the issuance. So the Climate Transition Finance Handbook really gives recommendations on disclosure alongside several key elements. Now, what we've done last year, because we realized that in certain parts of the world, especially Asia, there is still demand for a transition label. So we explicitly added a sentence in the guidance to say that, of course, even if you issue a green bond or sustainability bond or an SLB, you can add a secondary designation or label, if you want to call that, and call it a transition bond. And we have seen that very well exemplified by Japan this year, which issued a sovereign transition bond, which really, when you look at it, is a green bond that also aligns with our Climate Transition Finance Handbook. On SLBs specifically, as you know, there has been a lot of criticism around materiality of KPIs and also the ambitiousness or sometimes lack of perceived ambitiousness of sustainability performance targets. What we continue to do is update our guidance and also issue additional guidance. So, for example, we have a KPI registry, which gives indicators that can be used. It's not an exhaustive list, but it gives an idea as to what kind of KPIs could be used. We also differentiate between what KPIs are core to certain sectors and what are rather secondary. We also, having seen issuance from two sovereigns, Chile and Uruguay, last year we updated language to cater to sovereigns as well in that space. And then also we issue new guidance. So this year in June, in time for our AGM, we came out with brand new guidance for green enabling. So that's really the supply chain. That's very important. Increasingly, we see that we're not just looking at financing green projects, but we also very importantly need to finance things such as mining of lithium and other minerals, perhaps also in the steel space, everything that's being used for perhaps manufacturing of wind farms, EV batteries, and so on. So we've come out with green enabling guidance, which is meant to be used or rather mapped to green eligible projects under the green bond principles. And then maybe lastly, when we talk about sustainability linked instruments, they're not just the bonds, there are the loans, of course, as well. And following some deals in the market this year, we also came out with guidance for sustainability-linked loans financing bonds. So those would be use of proceeds bonds that are used to finance or refinance sustainability-linked loans.
Mm-hmm. Thank you very much. It is, as you mentioned, it is very interesting to see what is being developed in all the subgroups that you are heading, and also the outcome of it will be interesting on how it will become the future voluntary market standards. And all right, one of our panelists who's closely looking at what you do and publish at ICMA, or to be more precise, at the principles, is me, of course, because I work with your principles and guidelines on a daily basis almost. But the person here is also one frequent issuer, for which I look at you, Natalia. Please give us a very short explanation. What is IFAD in general, and how is your approach towards sustainable finance?
Thank you. Thank you very much, and good afternoon, and it's a pleasure to be here. And it's a pleasure actually to have the opportunity to talk a little bit about IFAD, who is, as you said, the International Fund for Agricultural Development, which is both a specialized UN agency and also a development finance institution. So while we are a little bit, the new kid on the block when it comes to issuance, we've been around for quite some time. So IFAD was established actually more than 40 years ago in 1977. And our entire mission since then is really to provide financing for rural and agricultural development in developing states. So we work 100%, we finance projects through loans and grants in the most remote rural areas of developing member states. We operate currently in a little more than 100 countries in 5 regions. So we are a global institution. And we really focus on what we call the last mile, so to speak. And we work in areas where maybe, allow me, the bigger sisters probably don't necessarily go and operate. And so this is really what IFAD has been doing since inception. And while up until recently we were funded only through paid-in capital, of course, it doesn't come as news to anyone in this panel. I believe that we're lagging behind when it comes to the trajectory to reach the SDGs, especially I would say IFAD focuses on SDGs 1 and 2. And if you look at the latest report that was issued by one of our peer Rome-based agencies, which is the State of Food and Security report issued by FAO, it tells us that in 2023, there were still more than 700 million people undernourished in the world. And, we need really, if we want to close the financing gap to reach SDG 2, we would need several trillions. And so that's why IFAD scaled up, as simple as that. The demand is huge. And we started complementing our funding by setting up an MTN program, by setting up a sustainable development finance framework, and starting to issue bonds. Now, thank you for calling us a frequent issuer. I wouldn't say we're yet a frequent issuer, but we certainly aim to become one. And our entire MTN program is a use of proceeds program, linking to what Simone was saying, because this is what IFAD does. It's our core business. IFAD, if you look at the types of project that IFAD supports, and maybe I'll have the chance to talk about it later on, all of our projects support 16 out of 17 SDGs. So the only SDG we don't support is SDG 11 because it's sustainable cities. And as I said, IFAD operates in rural areas. So that's not an SDG that we support. And that's why we look at sustainable, and we created a sustainable finance framework following the ICMA sustainability bonds guidelines. Because if you look at the true nature of our projects, these you cannot categorize them only as green or social. They really are a blend of the two. And that's why we issue sustainable bonds. We have also issued a theme bond recently, which was a nutrition theme bond. And the reason why we are able and we are truthworthy to issuing a nutrition bond is because nutrition is one of the themes that we mainstream in our project portfolio. So we support several types of projects, but there are 4 themes that we mainstream, meaning that every type of project has an element of one of these themes, which is nutrition, youth, gender, and climate, of course. And that allows us to issue, a bond with a theme that really resonates and links to the entire project portfolio that we finance. I'd like also to add that IFAD is one of the largest providers of climate adaptation finance. We talked about climate finance with Annette in the beginning. IFAD has a decade-long experience in providing climate adaptation and in shaping projects that actually focus on climate adaptation. And the reason why 90% of the climate finance we provide is adaptation is because in the areas where we operate, unfortunately, climate change is already a reality. In rural areas, it's a reality. Rural smallholders, producers face the challenges and the reality of climate change already. So, droughts and floods. So what IFAD is really trying to help, and where we believe we're most effective, is giving the tools and the means and the technologies to adapt to climate change, rather than, unfortunately, to mitigate the effects because they are already there. So that's a little bit what IFAD does in the sustainable finance arena.
Thank you very much, Natalia. It was very interesting to see on how you are active worldwide. You just mentioned it, more than 100 countries you are active in, focus on agriculture, nutrition, which is, of course, the topic for socially sustainable development. And Talking about being active on a global scale brings me also to the other institution that is present here, for which I look at you, Dieter. I personally know the World Bank from the funding side, so I speak quite regularly with your colleagues in Washington, and when it comes to your sustainable development bonds, your outcome-based bonds. But looking at you as a specialist consultant on sustainable finance, could you please give us a few more insights about what your department does, and also what is your connection to sustainable finance, or on a broader scale to the transition topic?
Yes, thank you, and absolute pleasure to be here. Hello to everyone. Yeah, the question you're asking is, I think, the question we also continuously revisit, and maybe a bit of context first. So I joined the bank about 6 years ago, and before was in central banking, but then found that sustainable finance is a fascinating field, much work needs to be done and still needs to be done. And if you look at the World Bank or the World Bank Group, which also includes IFC and MICA and other, we are here in the World Bank, the IBRD, where our main counterparts are countries and sovereigns. So we also talk to the sovereign issuers, talk to central banks, other DFIs. And of course, you can imagine the topic of climate finance, climate change is very, very close to our goals. And the connections perhaps you can make it quite broadly, because especially given that we focus on emerging markets, developing countries, you cannot really talk about development without talking about climate change and vice versa. So development finance, trying to see where we can help countries to grow and ideally grow sustainably. These are traditional topics, right? These are topics that are not new just because of climate finance. This is something we've been doing for many decades. But the climate change aspect and also the nature aspect is something that is not just a new risk, but also quite an interesting area to do more research, to advise, and to have an opportunity on development. So the main business, what we do, of course, is loans, grants, helping countries, financing. And the colleagues you talk to, mostly probably in the Treasury part, which is about the funding side of the World Bank, we are in the finance, competitiveness, innovation, global practice. And global practice means we're looking at all countries that are members. And particularly there, we are in the long-term finance team. And if you're interested in what we're doing there, we just released a new report, which is an inaugural report of a new series, namely the Finance and Prosperity Report 2024. And there you can find topics that are pure climate finance, but also connected to debt sustainability, or the sovereign bank nexus about, again, financial stability, but also looking at the banking sector vis-a-vis climate risk and climate finance, and really looking at it from a data perspective, looking at it with evidence-based research. But so compared to the others, what we are, maybe others, I mean colleagues or the Treasury Department, what we're trying to really focus on is on advisory support. And this can either go from just traditional advisory and looking at that the sustainability, but also at, in this case, sovereign ESG. This has been a major topic of our work. For example, if you ever come across a sovereign ESG data portal, where we try to bring in all the main data sources that are publicly available, this is a product from our team, together with colleagues in Treasury and Environment. And in this context, we look, for example, at the ingrained income bias, where we want to make sure to highlight the difference between corporate ESG, or just the standard ESG, and what it means on the country level. Because, as I mentioned very early, it's really difficult to talk about climate and sustainability if we don't think about levels of development and income. So this is, for example, through this, we engage with rating agencies, index providers, and we were very happy to see that they looked at our work seriously and also incorporated this into their indices, for example, by adjusting them for the bias, by finding ways how to penalize lower income countries. And what we're looking at now, and very happy to talk more about this, is how to operationalize this kind of data. right? The data is there. You can use it for various things, inform ratings, inform country assessments. But very importantly for us now, for example, how can we use this for monitoring? How can we use this to assess impact, to assess additionality, or identifying the lack thereof? And so this approach of using data, using research, using the experience and expertise, I think is very much useful for all kinds of engagements. But so transition finance, climate finance is something that we are very much focused on these days.
All right. Thank you very much. You mentioned something very interesting, the usage of data in order to create additionality. I mean, we all know that additionality is one of the main criticisms when it comes to the sustainable finance market, especially green bonds, social bonds, where there is this concern that you basically just refinance projects that would exist anyway. But what you are doing actually in order to get the data to create a meaningful impact reporting is something that can be actually of help, of value for the investors. So I'm looking forward to come back to you afterwards. And if I listen to you, what you mentioned about your setup and taking into consideration, of course, all the other development agencies, the supranational institutions all around the world, I see, and I can think of a connection between you and our representative from the German Federal Ministry, because Annette, since we have the World Bank as one development institution on the panel and also in a broader sense IFAD here on the panel, could you please explain how and where you work together with these institutions, and feel free also to give one or two vivid examples on this behalf for our audience to have a better understanding on where the cooperation takes place?
Yeah, thanks very much, David. There's a plethora of instances where we work together with the international financing institutions, obviously. But for us, really, World Bank, for example, is financing managing and as a trustee the financial intermediary funds and trust funds, and so to these also belong, for example, the Green Climate Fund or the Climate Investment Funds, or which are huge vertical climate and biodiversity funds. So they're servicing the international conventions, and they're catalyzing extremely important public funding into climate and biodiversity, but they're also sort of breeding grounds for innovation and solutions we can then scale up with other financial opportunities. And for us, the MDBs in particular, but also other organizations like IFAD, for example, they're bringing important comparative advantages to the table, particularly their deep economic expertise. Obviously, we just heard Dieter talking about data and monitoring and sort of having the evidence and what works and what doesn't work. And that's hugely important. But they also have a deep reach into the relationships with governments, with partner governments, which is also crucial, particularly because we're talking about changing policy frameworks, changing cultures, changing the setups for the private financial markets in these countries, and integrating climate adaptation, etc., in countries, for example, in the thematic area or sector area of nutrition. They also have the experience in supporting national reform processes, and obviously the use of policy-based finance as an instrument that then structures deals to leverage further funds for national governments. And in particular, obviously, like IFC, they also have the capacity to leverage private funds. And that's harking back to what I said earlier on in my first reaction. Therefore, these capacities of the MDBs and other international funds is really absolutely crucial for mobilizing additional funds within the sphere of these vertical climate and biodiversity funds I talked about earlier on. One specific example is the newly set up Global Biodiversity Framework Fund, GBFF, which was set up under the GEF. And here, Germany really had the interest in setting up a fund that has the huge potential of leveraging private sector financing through MDBs in particular. Our first experience is not, hasn't really fulfilled our expectations. So the leverage for private sector finance wasn't quite as high as we thought, and also the engagement of the MDBs wasn't quite as high as we thought. There might be several reasons, and we need to look deeper into that, and we're going to do that at our next session of the fund. But what's really noticeable is that there's still lots to do for how MDBs and these vertical funds that donors are particularly interested, but also recipient countries are particularly interested, because I said earlier on, they are the catalysts for climate finance, how they work together in order to mobilize additional private sector finance. Thank you very much.
All right, thank you very much for these insights. And you mentioned something very interesting, which is the biodiversity fund. And what I can see from my point of view, whenever I talk to our clients, is that biodiversity is actually getting more and more momentum in the sustainable finance market. Still on a very small scale, but I would say the growth there is quite exponential, and it will be interesting to see on how biodiversity will find its way in the future sustainable finance markets. And biodiversity is also closely related to, of course, agriculture. So if I look at the connection between you and the development agencies, I will also take a look, of course, into the other agency that we have here on the panel with close ties to politics, which is the IFAD, for which I would like to bring you on board again, Natalia. Because looking at the topic of our panel, if you think about transition, one might actually think about the so-called hard-to-abate sectors, so the heavy emission-intensive industry. However, and as you mentioned in your first answer, IFAD is active in the agricultural sphere. Could you please give us a few examples of projects you refinance with your thematic bonds that you mentioned in the very beginning? And please feel also free to talk about pros and cons of thematic finance in general.
Thank you very much. Yes, with pleasure. So yes, as I said at the very beginning, IFAD is 100% focused on rural agriculture. Nevertheless, in that space of rural development and agriculture, we really try to tackle the development issue at a 360 degree. So we finance several types of projects focused on specific sectors. And in fact, the first one is indeed environment and natural resource management, which has to do with wildlife conservation, biodiversity conservation, conservation of forests, reforestation, protection of soil from desertification, for example, just to make sure you know exactly that the land can be used for agriculture. And just as a side note, I fully agree with you about the growing importance of biodiversity. In fact, IFAD has a biodiversity strategy. It was just approved 2 years ago and is in the process of revising the strategy and now merging it with its climate strategy. And one of the important issues is indeed also linked to what we were mentioning before about the measurement. How do we measure biodiversity? What are the key KPIs? What are the core indicators that we actually can report against? Not only for the investors, but actually, firstly, for us to know whether we are impactful, yes or no. So environment and natural resource management is one type of projects that we finance. Then I'm talking about, of course, the big types, because then I could talk forever if we go into the details. But for example, we finance production sectors. So the use of land, the access to land by smallholder farmers. Not only that, also their access to land registration rights is very important that, for example, women and youth, also get to own the land where they operate, because this, has effects towards generations. And it's not only working on the land, it's also owning the land. So access to land rights, access to water, everything that has to do with irrigation, water storage, water drainage, water harvesting, because there is no agricultural world without water, of course. We work a lot on crops, new technologies for crops, and this goes back to the climate change and, how to develop crops that are actually resistant to climate change. That's very, very important. And of course, the areas of fisheries and aquaculture, where we not only focus on the inputs, so food, fish, food, bait, and boats and everything, but also teaching sustainable fisheries practices, sustainable practices for fisheries. as well as in the area of livestock and pastoralism. So this is all the production sectors. We're trying to help rural producers to increase the yield of their production. Following the value chain, because it doesn't stop there, following the value chain, a very important area is also that of access to markets. You know, we have to help rural producers to then make a living for themselves with the products that they produce. So access to markets doesn't mean only transportation, but it also means transportation, how to reach local markets. But it also means building SMEs, building rural producer organizations, training also our beneficiaries to actually interact with markets, you know, how to set a price, how to store, all of these issues that we take for granted, but in some rural areas are not taken for granted at all. So access to markets is a very, very important aspect. Access to financing, needless to say, you know, microfinance, not only for the consumers, but also for the providers of finance. You know, IFAD can offer guarantees to local banks and development and domestic financial institutions so that they're actually more willing to take on the risk to lend to rural beneficiaries and rural producers organization. Then, of course, we also look at the basic social services, and that's why I was saying, you know, our framework is really a sustainable framework. You know, water, health, literacy, sanitation, and waste management, all of these basics. Last but not least, and that goes to the point that we were talking about before, IFAD also supports interventions in what we call policy and institutions, and this is really where IFAD, you know, sits at the table with local regulators and makes sure that when guidelines or regulations are drafted, the interests also of rural communities are represented. And, you know, this is important. I should have mentioned before that IFAD lends to governments, just like the World Bank, so our counterparts are actually sovereign counterparts, but we have 40 country offices around the world. My colleagues, not me because I sit in Rome, but my colleagues, you know, have been developing relationships, as Annette was saying, for, you know, many decades with local governments. And that is crucial because if there is no government ownership, no development projects or no development intervention, but I believe by any NDB or IFI can be successful. Now, when it comes to thematic finance in particular, I alluded to it before. I do believe that thematic finance and, you know, thematic bond issuance has an importance, but I will also say that it depends on the issuer. For an issuer like IFAD, that, as I said, is a pure player in development, yes, if you want to highlight a specific theme, it makes total sense to issue a bond that can be a nutrition bond or can be a climate bond, as long as, you know, it resonates with what we do and it's measurable. Because one of the, I mean, I don't need to tell Simone, one of the key aspects of the pillars of ICMA is reporting. And so we have to have a robust reporting system, a robust M&E system to make sure that we can actually report to ourselves, course correct, report to our governments, report to investors. And if that's not the case, then, you know, you don't want to put a sticker on something that remains only a sticker. So for other issuers that are, I was looking, for example, at Repsol. Repsol has an incredible green bond framework. So there, you know, to channel specific funds that are earmarked and that are ring-fenced, then, of course, thematic finance makes, in my view, even more sense. So I would say that, you know, having themed bonds and thematic finance makes sense for issuers that really are part of a bigger transition. It makes perhaps, and I don't know if Dieter would agree, not necessarily as much sense for issuers that, you know, have a development mandate from day one, you know, since they were established. That is my personal view. And I just want to highlight again that what is key is being able to report against the use of proceeds and have strong M&E system and reporting systems, because we have to be held accountable for whatever sticker we put on a bond. That's my view. Thank you very much.
It's a pretty interesting point of view that you just gave us. And you also showed that, yeah, I would say transition is not exclusively limited to the environmental sphere. As you mentioned, the fields you are active in worldwide, they all contribute to some sort of social transition. And you also mentioned that reporting is crucial, of course, for all of the issuers of sustainable bonds. Reporting is the key element in order to communicate to the investors what have we actually achieved. And this is something that Dieter also mentioned at the very beginning, the need for data, and not only the quantity of data, but also the quality of data. So if I continue to think about transition and label finance, we usually also in our DZ Bank Sustainable Finance team, we talk about the transition bonds, as it was already at the beginning mentioned, with the example of Japan, the sovereign transition bonds. These transition bonds, they might appear as a use of proceeds structure where the proceeds are used for certain purposes, or also as sustainability-linked instruments where the financing element, which is usually the coupon payment, depends on sustainability targets you as an issuer need to achieve. So as you see, a relatively complex setup, but we have an expert consultant here on this topic. So I would like to bring you again into the game, Dietmar. What have been the challenges you have faced when advising on sustainability-linked bonds or KPI-linked instruments in general for your clients? And what is your opinion? How can KPI-linked instruments actually support transition finance worldwide? And how do they relate even to other instruments like green bonds or the so-called debt for nature swaps that we start to see more and more in the sustainable finance market?
Yes, thank you. And I think this question is something that, it comes up quite often. And I can share a few experiences since the two issuances in Uruguay and Chile. We've heard about a lot more interest in this area. Of course, the skepticism is there, as I think Simone can very much vouch for as well. The question about sustainability, additionality, what are we actually paying for? And SLBs, or if you want to take it more generally as KPI-linked instruments, or even more general, state contingent debt instruments like inflation-linked bonds, GDP-linked bonds. These are all a family that we can tap on, and they're instruments suited for specific purposes, right? And sometimes it's maybe easy to think that, well, maybe green bonds are better than SLBs and SLBs are better than debt for nature. Well, the right instrument for the right purpose. So that's also how we approach when we, for example, right now, the government of Kenya has openly committed to issuing SLB 500 million. That's what we are actively helping and advising. But at the outset, we were coming there with one option on the table and saying it has to be an SLB. Absolutely not, right? If a green bond makes sense, we go that way, because our role is indeed to facilitate the advice and perhaps the help with concessional financing. And what we are working a lot on these days, for example, just Kenya, but also in other places, we're working very closely with the Inter-American Development Bank on the so-called Amazonia bonds, which again, as an approach, is a whole family. It's not restricted to SLBs or use of proceeds. It can be either, whichever one makes sense, whichever one we can really have measurable impact on. And this brings me to perhaps a point that we should be very careful about, because we've seen in the corporate market as well, the number of SLB issuances has dropped. And this could be because of market saturation, but could also be because of just concerns about quality. So when we take a step back and we think about how would we do this, well, impact investing is not new. And assessing impact is a discipline that's not just in finance or economics. If you think about the medical industry, any drug, you have to come out and show that this works. There's a counterfactual, there's a control group. And if you look at what we put out recently, that's partly, for example, for Brazil on deforestation, hypothetically, if they were to issue a bond, what would be a good target? What would be a good way to assess, did they really lower deforestation? You will find several of these terms again, of counterfactuals, of benchmarking, of what would have happened otherwise. And I think we are not inventing anything new. Everything we're building is perfectly in line with what the International Capital Market Association has put out as the principles. But in some cases, we might go a bit further, and further in the sense of making sure there's always the data that we can use to set targets, right? we were asking ourselves, what is a feasible target? What is an ambitious target? How can we have both? What's the trade-off in between? And trying to put in the uncertainties, understanding what could be a good target that both issuers and investors will be happy with. At the same time, KPI is not simple, right? If you want to design a good KPI, in some cases, the measurement itself is fantastic. In other cases, if you look at, we always talk about emissions, and it's about emissions reduction. But if your KPI is to reduce emissions and you have a global pandemic, well, suddenly the KPI is fulfilled for everyone without any of their additionality. So we have to be careful about this, right? And it's not always easy. And let me perhaps end to answer your last question on what are the challenges. Well, on the one side, there's a financial challenge, which is the step-down structure, the incentive, right? We have seen only Uruguay doing this so far. And people were able to buy this, even though some were skeptical. And from an economic point of view, if you want to have any incentives, you need both carrots and sticks, right? Without one of the other, of course, it could work, but it would make sense to have both. The other challenge is indeed the complexity. So what I just showed you or discussed with you briefly about, counterfactuals and stuff, it makes the transaction, the instrument more complicated. But we have to be aware as well, maybe through the complexity, we gain a bit more impact or measurable impact. And how do we value this? And there's a long road ahead. And we're working, of course, with other partners together, specifically with standard setters, to make sure we can get something out that has measurable impact. Thank you.
Thank you very much. And you mentioned something very rightly, that the issuance of sustainability-linked bonds, and I've noticed it here, has been dropped or is stagnating, let's say it like this. And the criticisms around sustainability-linked bonds or sustainability-linked instruments in general is that the targets might not be ambitious enough, that the KPIs might not be material or relevant enough. So for which it is quite nice to have you there as a consultant providing advice, also sometimes with us, with the Z Bank, when we structure a sustainability-linked bond framework. And of course, another entity which was mentioned at the very beginning is the ICMA principles with a KPI registry that you can access and where you can find KPIs according to the respective topics, to the respective themes. And coming back to the International Capital Markets Association, I would like to finalize this round also looking a little bit at the time. We still have 10 minutes. To look at you, Simone. I mean, you are sitting, as I mentioned at the beginning, in the machine room, and financing the transition might not always be easy. I can imagine this. I can imagine that even me myself structuring the frameworks for our clients, it is not always easy. You have many challenges you are facing. What kind of challenges do you see or do you face when financing the transition, Simone?
Yeah, so we're the standard setter. We're not Dieter and Natalia and others know more about the actual challenges with financing and structuring. But what I can definitely see and what I hear as well is that one challenge or perceived challenge perhaps is the fact that transition isn't defined, right? So that's also a challenge often named by banks when trying to provide transition finance to their clients. We don't have a definition for transition. We see transition really happening on the one hand economy-wide, and on the other hand climate transition, maybe more on company level, and then there specifically the hard-to-abate transition. What we say in our climate transition finance handbook is that you should really, if you're doing transition, if you want to raise finance for transition as a corporate, for example, but also as a sovereign, you should really have a strategy and ideally a transition plan. Transition plan is really something that we hear more and more about. They are mostly voluntary. We have one regulation now, the CSDDD, that makes it mandatory, but otherwise they're mostly voluntary. But we really think it will be helpful to raise transition finance through a labeled bond or even conventional bonds. So we always talk about sustainable finance with labeled bonds, but you could even raise finance for transition through a conventional bond. If you have a credible and ideally public transition bond, that also is contextualized by mentioning the geography and sectoral pathways, by laying out how the corporate, for example, is going to execute the plan, how it's costing the projects that is going to finance, and so on. So really have a credible plan. We could also transfer that into the sovereign space. We have a COP29 coming up, and we know next year COP 2030 might be the more important one, even where we have an update on the NDCs, the nationally determined contributions. And that's really something that could be seen as a national transition plan. So similarly to a corporate having a transition plan, a sovereign could have a national transition plan and bring that out in form of the NDCs. The other challenge is, of course, the social space. We've already heard a little bit about that, especially economy-wide and in the hard-to-abate sector. The transition will have social consequences, and we've already seen by things such as the Gilets jaunes and so on, that you can't really put through transition measures without getting the public on board. We know due to geopolitical context and so on, we have a big focus in the EU and also globally on energy security. So really how we're going to combine all of that, taking care of energy, looking to energy prices not going too high, but on the other hand, of course, keeping your eye on the transition that is so necessary in order to achieve the goals of the Paris Agreement. So all of these things are challenges. We as ICMA can only provide standards and principles, and we do that wherever we see requests in the market, of course. But there is a lot going on, and I think really what we need is also policymakers to set the right framework, because often there is good intention. There might be an announcement for more solar energy, for more wind farms and so on, but then you see that permission for transmission lines and grids and so on take decades, or a decade, 12 years, 13 years and so on, to really get through. So a lot of challenges, but I think if we're aware of them and also aware of how we can, what we can do about them, then we should all work together.
Working together is exactly the word that, will be crucial for the future. Thank you very much for these insights, Simone. And looking at the clock, I would like to slowly come to an end. But first of all, I would like to give a very short wrap up, ladies and gentlemen, because I've taken some notes here. And what we have seen today, actually, this panel was opened by Annette. You showed us what is actually needed from a political point of view, private versus public financing. How can ministries and development institutions work together, actually? And I'm also quite delighted to see that next year you might be able to take my role here as a moderator, since you managed it so professionally at the beginning, while I had these technical difficulties here at the beginning. But coming back to the topic, development institutions and political institutions working together brings me to, of course, Natalia and Dieter. Natalia, you enriched us with valuable insights about your funding activities and explaining, of course, the special role IFAD has regarding agriculture. Dieter, you as a sustainable finance consultant, we both have quite similar roles, but nevertheless, it was also for me very interesting to see how you support countries, regions. You mentioned Kenya, for example, in your funding activities and with your knowledge about sustainability-linked bonds, for example. So I'm personally looking forward to cooperate one day with you together. It would be pretty cool, actually. And of course, Simone, last but not least, you as one central institution in the capital markets, you gave us the guidance ICMA is always giving us, also now during this panel. And I'm looking forward for your future contributions. I mean, the Z Bank, as you mentioned, is honored to support you in the current executive committee. So I think the time is already full. We are slowly coming to an end. And I would like to thank all of the panelists, Annette, Natalia, Simone, and Dieter, for your valuable time, for your presence here. And this is all from my side. Thank you very much, ladies and gentlemen.
Thank you.
Thank you, everyone. Thank you, David.
Thank you. Bye, everyone.